Hey everyone, welcome back to Talking Success. Big milestone last week. We hit 85,000 downloads. So a massive thank you to everyone who tunes in, to our guests and obviously to our sponsors as well, because without them, we really wouldn't be where we are. A special thank you to LexisNexis Risk Solutions, who I'm sure need no introduction, but are a global provider of AML solutions to multiple sectors, including fintech and financial services. They have a big presence in Africa, albeit headquartered in the States. So if you are looking at AML solutions for your business, please do give LexisNexis Risk Solutions a shout. The link's down there. This week, we're joined by Ron Shevlin, who I'm sure needs no introduction, industry legend, industry icon, joining us all the way from the States. So I hope you enjoy this as much as I did. Thank you. Hi everyone, welcome back to Talking Success. We're going cross-border today, quite far actually. So we're not going into Tanzania or Uganda or Zimbabwe. We're going across the pond. We're joined by Ron Shevlin from the United States of America, who is... Well, first of all, big thank you to Ron for joining us. If you don't know Ron, I'll let him do a quick intro in a moment. But what the idea for today's podcast is to get a view on what's happening in other markets, specifically the US. And before we started recording, I said to Ron, kind of my famous thing that if you've heard me sort of talk on stage, I always say, in developed markets, fintech's a luxury item, and in developing markets, it's an absolute necessity. And hey, Ron held me to account on that one and pulled me up on it, and I'm sure he'll share his views with you very shortly. But Ron, listen, welcome. Thank you so much for joining. Appreciate this early in the morning. For those who don't know you, I can't imagine there's too many people that don't, but if you can give a bit of an overview, a bit of an intro, and then we can kind of dive straight in.
Sure. Thanks a lot for having me, Darren. I'm thrilled to be here talking with you today. For anybody who doesn't know me, I have a real job. It doesn't really matter. I'm Chief Research Officer of a consulting firm called Cornerstone Advisors. But where I think more people kind of know me of is my blog called the FinTech Snark Tank on Forbes, and probably LinkedIn. I'm pretty active on LinkedIn these days, and try to get all my stuff out through there. So been in the industry for 30 years. I've been a consultant for even longer. So I've seen a lot of changes in financial services and banking. So Darren, thanks a lot for having me on. I look forward to chatting with you today.
That's my pleasure. So you've been in the industry before fintech was fintech, right? So when fintech was computers in banks, I would imagine, right? Going sort of back a few years or so. And you've obviously seen a huge evolution. I think what we'd like to do, or what I'd like to do today is really unpack what's happening, in your part of the world. And not to say, and I just want to preface this, is what we're definitely not doing here is saying, well, this works in the US. So, let's look at adopting this in Africa on the continent. Because very, very different markets, very different dynamics, very different people, very completely different infrastructure. Ron and I were talking again just before we came on about the difference between legacy telephone systems in Europe or the US versus in developing markets. I was just saying to Ron, I remember sitting on my parents' bed, being on the landline, talking to my friends, and having my mum listen in on the other side to make sure the conversation was should we say clean. So
see now we sit on our smartphones, and who knows who's listening in? The NSA, maybe Chinese spies. Who TikTok. They're all, actually, Darren. This isn't even fintech, but I'm pretty convinced that every device in my house is listening to me when my wife and I talk about something, and I open up the iPad and there's an ad for it. So don't tell me anybody's not listening here. But let's get into fintech instead of conspiracy theories.
You've not met my mother, but I'm more scared of my mother than the NSA. Let's put it that way, right? So anyway, I think where we were going with that sort of part of the conversation was different markets adopt different technologies in different types of timeframes. The mobile penetration across Africa is unbelievable compared to the slower adoption that we saw in the US and in Europe. But Ron, if you can give us a kind of an overview, and I know this is a really broad question, but what are the sort of trends and themes that are happening in the world of fintech in the States at the moment?
Yeah, let's take like a 10-year view, Darren, if we can, looking back about 10 years, because 10 years ago or so, a whole wave of fintechs came into the U.S. market, started in the U.S. market with the goal of really kind of displacing existing financial institutions, predominantly from a retail consumer perspective, to a lesser extent, the small business space. And some gained some good adoption, but for the most part, two things happened. One is a few of them were profitable and had sustaining business models. And for the most part, they have not for sure displaced existing traditional legacy financial institutions. If you're familiar with Clayton Christensen and his innovator's dilemma, this is really a classic case of it. Christensen's theory about innovation is that new innovators come into a market and then attack the fringes, the underserved aspects of the market, and then from there get a foothold into the market and start moving into the mainstream. And I'm not sure what his theory was or perspective was on how long that takes. But we're only 10 years in, and really, I think we've only seen some movement into some of the fringe markets. You've got a neobank, challenger bank, whatever you want to call it, like Chime, that has 15, 20 million customers now in the U.S. In the scheme of things, that's a pretty good customer base. I mean, even a J.P. Morgan Chase, Bank of America is probably at 100 million, but that's across a lot of different lines of business. But it's a very limited, and they're really focusing on the low to middle income consumer market. Robinhood came in, really created some new investment opportunities for younger consumers. But then when the downturn hit in our economy, that hit a lot of consumers really hard. And you had a lot of young people who didn't know what they were doing around trading calls, puts, options, things like that. And there was a real downturn. So you had the rise of the consumer-focused fintechs, a little bit of downturn as they kind of washed out a little bit. And meanwhile, the next wave of fintechs came in. I think to a certain extent, we're kind of focusing on the small business market, which is a tough market for a lot of banks to serve. It's a very diverse market. Everybody likes to throw numbers around. Oh, there's 86 million small businesses in the U.S. Yes, and there's 86 million different types of businesses in the U.S. And it's hard for banks to kind of focus in on the individual needs of the various segments in that space. But you had companies like Brex and a few others who come into the U.S. and help to build that market. I mean, even Silicon Valley Bank in the technology space, grew up supporting technology companies over the past 25, 30 years. And so that wave came, and that wave hasn't died out yet necessarily. But the third wave, which I would put in more the last 4 to 5 years, has really taken hold, which I would consider to be enterprise fintech. Fintechs who are serving banks, brokerages, insurance companies to help them from an infrastructure perspective. Now, depending on give me 10 more seconds, 15 more seconds, depending on how you think of the term fintech, I think most of us use it to represent the newer technology companies that have come into the space in the last 10, maybe 15 years. But when you get some of the legacy financial banking technology companies like FIS, Fiserv, Jack Henry, they get really offended. We're fintech too, It's like, oh yeah, okay, you're fintech. They've gotten to be so big, so colossal that they're the new elephants in the space. They move slow. Actually, do elephants move fast? Maybe that was not a good analogy. But they move slow. And a lot of banks, a lot of credit unions here are very, unhappy with the speed at which they move. And so they, turn to these emerging enterprise or B2B fintech companies who are really enabling new fraud and risk management, new digital banking capabilities, new innovation and integration capabilities. And so this is the new wave that's kind of happening. We've had a great infrastructure from a technology perspective here in the banking space for 30, 40 years. But as that infrastructure has aged, now the fintechs are moving in, looking to create and develop the new infrastructure in banking.
It's interesting you mentioned obviously the big enterprises or the enterprise software providers, and I think we'd be remiss if we didn't sort of talk about the schemes as well. We don't have to mention them by names, but there's pretty much two big ones. And how they're pivoting their business to not being a card business anymore, but to being a technology business. I was with one of them actually for lunch today, and having this whole conversation around actually we're now a platform where we're effectively an integration layer between bank and service provider or merchant or wherever it may be, and seeing the adoption or seeing the adaptability and the pivots of a giant like the one begins with a V and the one begins with an M, seeing how they're sort of moving and maneuvering in the markets, I think is a sign of good things to happen. But it must be like doing a U-turn on the Titanic, trying to shift one of those monsters around. But I think there's a lot of talk around platform as a service and banking as a service, and that layer there. We had another podcast a few weeks ago with Brett King, and he was talking about the bank in 2050, and that it would literally be something in the background that you don't really see. It's a kind of a technology company, and the front layer is going to be your fintechs, and the banks will then provide the compliance and the infrastructure and the regulatory controls and what have you, which makes complete sense. But there's a lot of people, I think, or a lot of companies vying for that sort of middle integration ground at the moment. And I suppose from a bank's perspective, do you entrust a long-standing technology company like the ones you've mentioned, or do you bite the bullet and go, actually, we're going to try something new and we're going to go for this little startup that's got maybe a few $1 million worth of funding, and it looks a really cool system? I think the risk guys in the bank are probably sitting there quivering. But are you seeing some of the banks adopting some of this newer technology? Are they happy to do so and take a bit of a risk?
Yeah, I'm going to answer that, Darren. I just want to make a quick comment because Brett is a good friend of mine. I've known him for at least 15 years now. And, he travels all over the world talking, and he's now a great futurist and stuff. And I always tell Brett, you really should take me with you when you travel. And he's like, why would I do that, mate? And I'm like, because you're a futurist and you're telling everybody what banking is going to look like in 2050. And I'm a nowist. I can tell them what's going to happen now, between now and 2050, because you got to fill in the blanks, Brett. Come on, how are they going to get there to this vision? So he and I joke a lot about, well, I joke about it with him. And to this date, he still hasn't taken me anywhere, but I'll keep working on that. You raised a great point about the platform and integration piece, Darren, because look, the banks are in a tough place. As I said, they trust their providers, both the core provider, now the digital banking providers, but the weakness has always been integration, both internally and externally. And that's been a real big trend past 10 years. Is it's not so much just tying in together the internal applications and systems you're using, but now they want to tie into third-party partners, other fintechs, whoever it might be, even brands and merchants and other types of businesses. And so that integration has been a huge, huge issue. And yes, it is a huge strategic decision to say, are we going to go with the integration platform from our core vendor, or are we going to look to a third party? Now, I can tell you, because every year for the past 9 years, I've been doing a study. In fact, just published it yesterday, called What's Going On in Banking. The 2024 edition is out. And one of the questions I ask in the survey is, who do you turn to for your integration platform? And about 2/3 of the respondents in my survey do turn to their core provider for it. But they recognize that there's this big trade-off, that it's going to be a slow deployment. It's not going to give them everything they want. But the challenge is on the going to a third party for this is it's a huge bet from a from a business risk perspective because these are startup companies. Um, you don't know how well funded they are, how what the outlook for their business model is, and can they really deliver. A few of them have been around for a couple years and taking hold. I'm very bullish on them for sure. I think they've got a lot of things going, but they're still early in their evolution. So it's a that piece is an absolutely huge strategic decision to make. And honestly, Darren, I have to tell you, I think there are a lot of bankers who don't get that that's a strategic decision. I think they still think of their business very much as a person to person relationship business. I can't tell you how many strategic planning and board meetings I've been in the past couple of years where they're talking about growth, and it always comes down to, well, we need a guy in that geography. We need a guy. I'm like, no, you don't need a guy. You need digital presence. You need the technology. You need the partners. You need the integration. I think they finally come around to understanding what APIs are. But Darren, this really now ties back to what I think is I think it's probably the absolute biggest challenge that banks and the banking industry is facing. And it's all about resources, human resources. It is tough to hire anybody these days. It is tough to find the technology skills you want. Over the past couple of years, up until recently, all the good folks were going to Microsoft, Google, the big technology companies, the Facebook, who were paying huge amounts of money. And if you're the CEO of a bank, are you going to hire a 25-year-old technology person who wants more money than you're making? This is tough. That's changed a little bit. Google and the folks, they've laid off a lot of, Facebook, they've laid off some people recently, putting those skills out there, but it's still not easy for the banks to get. This is part of the real fundamental shift in the industry, Darren, from hiring tellers and bankers to hiring technology bankers. And that's a big shift in the industry, and it's a challenge for the fintechs as well. As they are now struggling to find second and third rounds of funding, they're letting people go, and it's the human resource aspect in the industry is really tough. And let me make one last point here. When I say the industry, there are a lot of folks who say, "Oh, we'll talk about the quote fintech industry." We can argue about this. I do not believe there is anything called the fintech industry. It is the banking industry or the financial services industry. Fintech is part of that. It is not its own industry. It's the banking industry. Fintechs are part of it, but it is the banking industry.
Oh, that was like a dagger through my heart, Ron. It really was. I'm not gonna. I'm not gonna jump on.
Argue it. But I'm open. Prove me. Tell me I'm wrong. I'm always open to getting slapped upside the head and told I'm wrong.
No, listen. I think financial services as an overall umbrella, definitely. But I think fintech. As I said at the beginning, banks have been using tech for as long as I've been in the industry, which is 20 odd years, right? And they've been using trading systems, and they've been using messaging systems, they've been using Swift. So this has all been there. I think what's happened, in my personal view, is that it's become sexy, like these things tend to do. Someone gives it a name and goes, "Hey, it's now something cool and sexy." And there's I think from a user's perspective, so from a general consumer, I know I look at myself and, if I was investing money 15, 20 years ago, I would invest it with a bank and they would send me a statement once a year. Okay. And this is how your, portfolio is doing. And that was it. Now, I feel I have more control over my finances. And I'm not talking about DeFi or anything like that. I'm talking about, I can literally open an app on my phone and go, right, how's my portfolio doing? What's the price of Bitcoin today? But that's another subject, right? So I think it's become more accessible. So I think fintech, whilst I agree with you, it may not be an industry and maybe a sub-vertical of the industry, I think it's empowered more people to be more financially aware and connected to their money than historically what it was. I mean, if we wind the clock back, Rod, we talk about queuing up in banks, to go and pay in a check or to go and pay a bill. I remember going with my parents and standing in queues for hours and hours. Now I can't remember the last time I've been into a bank. I genuinely can't. So I do agree. There's another element.
Let me just, Darren, sorry, let me, because you're making a great point. And you got to remember there's two sides to these coins, especially in the economy, supply and demand.
Sure.
The demand for what you're talking about has grown a lot over time, and this may be a very U.S. American centric thing. So tell me if you think it is. But from a U.S. perspective, this is a very generational type of issue. My parents, I'm a baby boomer. I'm a younger baby boomer, and my parents, who are the earlier generation, didn't come from a position where they had a lot of money to manage. So it wasn't a complex financial life. Thanks to the post World War II economic boom in the U.S., the level of affluence. I mean, we may not be, a lot of people affluent, but the level of affluence in the U.S. rose greatly after World War II and the economic boom of the 50s and the 60s. And as a result, baby boomers became really a first generation whose financial lives became a whole lot more complex. The innovation in the banking space with credit cards, all these types of savings programs, investments, 401k, retirement plans, became so complex that we had now a growing demand for more financial services and more help. But there was no technology there to support that. Then, thanks to really personal computers and networking, it's like, wow, we can dial up and get access to this or go to the internet. And then, of course, mobile, and then the growth, the continued evolving of internet-based technologies just lifted that up greatly. And then fintechs came in to say, wow, man, the banks are really kind of leaving a lot of holes. Banks and investment firms, brokerages, whatever, are not filling in all the capabilities that this technology can deliver. So the fintechs came in, creating a lot of, sometimes they were just really nothing more than new features, functionality, capabilities, but really filling the hole. What you're talking about is at the tail end of a growth of demand for these things that did not have the supply. Now we've got sort of both supply and demand interacting to create this huge level of adoption.
I agree, and I think one of the biggest demands, and that's kind of nice segue to my next question, actually, Ron, was when we're talking about cross-border payments or international payments. Now, there's a lot of money flow from the US outwards, right, wherever that be across the world. What we're seeing in this part of the world is that there's quite a bit of innovation that's happening in that space. Most of the innovation that's happening is now looking at using cryptocurrencies as a function, right? As a method of moving and transacting currency from one place to another. So rather than using it as, and obviously there's a big part of the population that still like to have a flutter on Ethereum or XRP or whatever other coins there are that look like dogs or cats. There is a utility, a very strong utility around using crypto rails to transact cross border. What is the general feel in the States when it comes to using crypto as a rail and an alternative method of payment? Is it something that's being adopted? Is there skepticism around it? What's the general view?
Well, the consumer view is generally couldn't care less about it because, look, reality is we got a lot of different payment mechanisms here. And from a strictly domestic perspective, it's way more hype than it is reality. There's a lot of discussion here around whether or not the United States needs a central bank digital currency. Um, I tell you, ask me on a Monday, I'll tell you my personal opinion is one thing. Ask me again on Friday. I think I've changed my mind based on what I've read. So I'm really not the guy to do it, to espouse on that. Basically, I just read David Birch, and whatever Dave says, I'm like, yeah, that's right, that's the guy. Whatever Dave says, I'm like, yep, okay, I'll go with that. He's the expert on this stuff for me. He's my go-to guy. But from a international perspective, cross-border payment perspective, we had a lot of people in the U.S. who do need to send money outside. But I think, Darren, the bigger potential here for this is actually the commercial, the B2B side. You've had companies like J.P. Morgan Chase develop, the JPM coin or whatever they call that. I think the opportunity is really more at the B2B side because of a lot of the international money flows but I think there's going to be this sort of competition among large corporations, some of the large global banks, and it's really just a few mega banks with maybe a few super large regionals here who have enough international business to kind of deal with. But I think for the most part, it's not going to be the crypto isn't going to have a huge impact from a payments perspective at the retail level as much as it will kind of the B2B level and mostly international. Now, having said that, there are some super large corporations here that I think can have an impact on it. Number one, Walmart. If you look at just the nature of the tentacles that they have in so many different businesses and suppliers that they touch, having a crypto-based platform to do payments within their network could be absolutely huge kind of impact. So, I think the focus is going to not be very sexy, not going to be very retail and consumer oriented, but very much behind the scenes. And going back to our earlier, discussion, very infrastructure related.
Just pick up on the first point you made, Ron, that the consumer doesn't really care. I completely agree with that. There's a couple of businesses, fintechs over in this part of the world who are building MTOs, money transfer operators, to do exactly that. So from South Africa to Zimbabwe, Zimbabwe to Uganda, et cetera, et cetera. I've had quite detailed conversations. How are you doing this? And they're using this coin. And I said, yeah, but what does your customer think? I mean, are they not worried that there's going to be volatility? If there's a gap in between, when I send and when it's received and the price fluctuates. He said, they don't even know that we use crypto rails. They don't need to know because there is no risk. We're using stable coin. And, if there is a slight, murmur in the market, it's going to be so minimal that, we would take that risk on. And it's just seamless. It's seamless to the consumer. All they know, it's cheaper and it's faster and it's secure. And my money goes from my phone to my friend's phone or my family's phone in Zimbabwe within 30 seconds or whatever it may be. So I think, I'm not saying we're blinding the consumer and doing, concealing things, but I'm sure you ask an average consumer on the street, you go to Walmart and you buy a bag of chips, do you know how that money goes from your card, to the bank and to Walmart? No, they're not going to have a clue, right? Because it's a very complex way of, if you mapped it all out and, this scheme involved and, and money flowing here and what have you, messages backwards and forwards, it's not as simple as I tap it and it physically comes out of my card. So, using alternative methods of moving money around makes complete sense. Ron, there's another question I want to ask, and this is a debate I've been having with a colleague, actually with a couple of colleagues recently. And I think I know what you're going to say, but I'm going to ask you nonetheless. I think there's a strong argument to say that there is no longer disruption in financial services from fintechs, and that disruption has already happened. And what we're seeing now is an evolution rather than a disruption. Would you agree or would you disagree? Love to get your view.
So it all, to agree or disagree with that, Darren, all comes down to how you and or I and anybody else defines disruption. And
Yep.
I have been arguing for a long time that what you just said is absolutely correct. But then I get the pushback that, well, no, Ron, I'm not saying displacement. I'm saying disrupting, and disruption meaning the changing of the way things get done. Now that's different. And I do think the way things get done in the industry are different and to a large extent, absolutely accelerated and maybe initiated by a lot of new players, i.e., fintechs. But I have historically always thought of disruption as, structural change. And I don't think we've really seen structural change in the banking industry here. I can't speak for your markets,
Yep.
but I don't think we've really seen fundamental structural changes. And to a large extent, Darren, that does not mean that fintechs have failed. Number one, if you're created a fintech with the idea of creating structural change, I would argue you were pretty stupid, because what you really should have been doing was creating a fintech to create a sustainable business, or as an investment. Maybe you don't even care if sustainable. You wanted to create some technology, sell it off to somebody, and make oodles of money. Totally respect that. Totally respect that. But if your idea was to create structural change because you started a fintech, you were dumb, because that the chances of that ever happening were slim to none. Because the way to create structural change is to actually start at the regulatory level and change regulations. As we speak, Darren, and I'm not sure when everybody else is going to see this, I have yet to publish this, but man, in the back of my head, one of my next blog posts is going to be titled "The Biggest Threat to the Banking Industry," and I mean the U.S. banking industry. The biggest threat to the U.S. banking industry is the U.S. government. And what they are doing from a regulatory perspective is fundamentally trying to kill community banks. And that's going to open the door for a lot of folks. But I think a lot of fintechs are going to look at this and go, man, you just squashed my capability to grow by, in effect, nationalizing and making the whole banking industry a government function. This is the direction we're going here in the U.S. Not a lot of people will say that it is not politically feasible for a lot of community bank CEOs to say that publicly. Jamie Dimon's never going to say that publicly. But basically, what the U.S. government really wants right now is to have 10 really, really huge banks that they can just control and get rid of the other 3,500 banks and credit unions that we've got in the industry. So I don't know, I'm going a little bit off topic here, so let me come back to your question. Yes, I agree with you.
Okay. Because again, I've had this conversation with different people in the subsects of fintech. So we look at people in the BNPL world, buy now, pay later, and they're saying we've disrupted, retailing, and we've disrupted credit. And you're going, well, if you scratch beneath the surface, you haven't really. Yes, it's a different way of a consumer purchasing a product or a certain product, but it's not really disruptive. On the flip side, you have a conversation with someone in the payment sector, and they say, "Oh, well, you can now pay using your watch, and soon you're going to be able to pay using, biometrics." Okay, well, that's really changed my life. I don't carry a wallet anymore, so I may have disrupted some of the leather industry, But other than that, I don't feel that's a massive amount of disruption.
No, Darren, anytime anybody asks you that, just hit them with, okay, how much payment volume has Visa, MasterCard, and American Express seen a decline of? There's no disruption in payment until Visa and MasterCard are fundamentally under the threat of going out of, until they get Kodaked, you know what I mean? That's
Yeah,
that's when I'll
absolutely.
believe there's disruption. But, seeing the volumes that they're getting, I'm not buying. We have to stop confusing payment method with payment disruption. Yes, pay by watch, pay by fingerprints, all of that kind of stuff are great technology developments. but they haven't truly disrupted the structure of the industry. They've disrupted, if you want to use that term, that's fine, methods and behaviors, but it is not a structural disruption by any stretch of the imagination.
No, it certainly isn't. Well, look, it's been really interesting, Ron. I think taking some insights from other parts of the world and sort of thinking about, well, how do they relate to what's happening here on the continent? And again, for everyone listening, I'm not suggesting Africa's a country. Okay, I've been here long enough. 54 countries. I know we're all very different. South Africa's got very different dynamics to Nigeria and to Ghana and to the rest of the continent. But if we do look at other continents to see what they're doing in terms, and certainly we look at Latin America as well, and what's happening there, again, similar-ish type of demographics and challenges with financial inclusion and what have you. So, Ron, thank you. I know you've got some publications sort of out and some coming up. Where is the best place for people to read more about what you produce, some of the research reports? You mentioned LinkedIn. Is that the best channel? Do you have something that people can subscribe to?
I guess love to have anybody connect on LinkedIn. Absolutely love connecting with folks there. I publish almost 3 to 4 times a week something on LinkedIn, and I try not to make it like it's not personal. This is content-y kind of stuff. And I'm publishing on the Forbes blog that people can subscribe to, the FinTech Snark Tank. They're not really subscribing to the blog; they're subscribing to me, so they'll get notifications. And you can actually you get 5 free articles on Forbes a month. So if you're going to do that, people use them on my articles, and then you get them all for free. But LinkedIn's the best place, and I'll link off to a lot of the reports that we get commissioned to write. Live on the Cornerstone Advisors site, and they're all free as well. So you can see the more formal reports. But on a day-to-day basis, LinkedIn is really the best place, where I'm having conversations with folks and getting ideas out there on a more or less daily basis. So Ron Shevlin on LinkedIn, best place to do that. And you'll see the links to the reports like what's going on in banking.
Great. Rod, we're going to put all the links, because we'll get them from you anyway. We're going to put them in the description on the podcast. So if you're watching on YouTube, they're below. If you're listening on Spotify or Amazon or, Apple, they're in the description. So just open your app and you'll see the links there. Ron, a big thank you. I appreciate you're a very, very busy man. It's early in the morning for you as well. It's kind of afternoon for me, but a big thank you to you from our team here and from our sponsors. We're sponsored this podcast by LexisNexis Risk Solutions. So a big thank you to them. They keep the lights on. And Ron, I wish you a very nice day. And let's see what 2024 holds for the world of financial services that has a bit of technology.
Darren, thanks a lot for having me on. And I'm wishing you had told me LexisNexis was the sponsor. It would have been good. I'm just glad I didn't say anything negative about them on the throughout the discussion. I'm usually getting in trouble because I'm usually knocking somebody. But good to know I didn't insult anybody too much on this.
No,
this
you
one.
didn't. And I must say we got a great editor. So if you did, it wouldn't matter anyway.
Good. Thanks, Darren. Rod, really appreciate you reaching out.
My pleasure. Take care.
Bye now.